In today's video, I'm going to be showing you exactly how I passed a one-phase $100,000 prop from challenge with the trading pit. I'm going to be showing you the exact trades that I took, the exact trading strategy that I used, and the exact confluences are going to be explained in full detail so that you can copy the strategy that I'm explaining today and use it in order to pass your own prop firm challenges. Now, without further ado, let's dive into today's video. Make sure to leave a like and subscribe to the channel, and let's dive straight in. We're going to start by analyzing EURUSD, and the very first thing that I'm going to do here is draw in my Fibonacci retracement tool. So what we can see here on EURUSD is that we were trading above the blue line, which is my premium pricing. Below the line is discount pricing. Now, whenever price is trading at a premium, so above the 0.5 Fibonacci retracement level, I am happy to look for a potential short position in towards the downside. So that is the overall first piece of confluence that we're using here, the premium versus discount tool. So when we're trading in premium, we can look for a potential short. Now, moving on into confluence point number 2, we look at something called market structure, and more specifically fractal structure. So when we look at fractal structure, we're just simply looking at the market structure of individual candlesticks. And what you could see here on EURUSD is that previously we were trending in towards the upside, where we saw a push up, a retracement down, a push up, a retracement down, a push up, and then we saw a strong push down, which broke the overall fractal structure, and more specifically the low of this bullish candle over here. Now, that low got broken by what? Well, by a supply zone. And how do I identify a supply zone? Well, we look for a buy up for a stronger sell down that actually broke that piece of market structure. So what we have here is a clear area of supply within premium pricing. So now we have two confluences. We have premium pricing and we have a supply zone from where we can look for a potential short position in towards the downside. Now, when we look at the third piece of confluence, we always look at liquidity. Now, how can we identify liquidity? Well, there are different forms of liquidity, but the easiest way to look at it is by defining these three. So what we have is, first of all, range liquidity, where you see an area of consolidation above the range and below the range. That is where liquidity lies. You wait for it kind of like a fake out and then a reversal in either direction. The second form of liquidity is trendline liquidity, where you, for example, have ascending lows, and what we expect over time is that these lows will get taken out before the overall trend in towards the upside will continue. And the third kind of form of liquidity is swing high liquidity, where above a swing high we have liquidity, or swing low liquidity, where underneath an overall swing low we have liquidity. Now, when we look at the chart that we have over here, we had very clear trendline liquidity. So we had beautiful ascending lows in towards the upside, 1, 2, 3, kind of like 4 over here. And now what we're looking to do is trade with the overall supply to take out all of these lows. So my overall target here for EURUSD was more specifically the very first low of the overall ascending trend line that we had here in towards the upside. So that is my overall liquidity that I'm then looking to target. So that is the third piece of confluence. We have liquidity to target, which lies in the overall discount zone, from where in the future we could then, for example, look for an overall long position. Now, when we then want to actually enter the position itself, what we could do is we go to the 4-hour time frame. And what we see here on the 4-hour time frame is, again, extremely clear, because we have a push down, we have a push up, and we have another push down. So what I have here is an overall, again, first piece of confluence, market structure. We have a bearish trend starting to form, which we can follow in towards the overall blue dotted line, which is our overall liquidity low. Now, when we look at the second piece of confluence, we look at liquidity. Well, what I want to do is, within that daily supply zone, which is the green zone, we look for liquidity, which can always be identified in the form of a bump in the road. So when you get an overall impulse down, look for a little overall swing high that we have over here. That is where liquidity will lie. Remember, that is the overall third form of liquidity that I just explained. So again, what we have here, market structure is bearish as we're forming lower lows and a potential new lower high, and we want to form a new lower low again here towards that overall liquidity low, from where we can then in the future maybe look for a long position once again. So market structure, first piece of confluence. Second piece of confluence, we have the overall liquidity high. So the third piece of confluence is then our overall premium versus discount tool. So again, we can see that we're trading above the 0.5 fib, so we're trading at a premium, and therefore we can look for an overall short position. So what I did here on EURUSD is identified, okay, we're trading at a premium, we've taken out liquidity, the overall market structure is bearish, and based on the daily time frame, where we're also positioned within a daily area of supply, and we still have liquidity to target, I'm going to be taking a first initial swing position. So what I did at the time is I placed a sell limit on top of the overall liquidity high, stop loss above the highs, and I targeted the overall main liquidity low that we have down here on this blue dotted line. And this was the first position on EURUSD that I took. Now, what we can then see is that the market retraced a little bit higher. It followed kind of like an internal little uptrend that we had here in towards the highs. And what I was looking to see is, hey, can we maybe break market structure? And then I'll potentially scale in with an even smaller stop loss. So what happened here is that the market started to consolidate or continue to consolidate. There was not a lot of momentum until this moment here, where we broke market structure in towards the downside and formed a fresh area of supply, again on the buy up before the sell down. Now, this was the moment that I was then ready to look for another scale in, because again, all of the confluences are here. We've retraced into premium pricing. We have market structure that is bearish. We had the internal liquidity high over here. And now we've also formed an area of supply within an area of supply, because the supply zone is formed within that daily area of supply. Now, what I did here was, again, I target the overall liquidity low down over here. And what you can then see is that from this area of supply, the market then eventually continues pushing further in towards the downside and then ultimately reaches our target a few days later. Now, these are the two EURUSD positions that I then took in order to pass that prop firm challenge. So this is part one of passing the prop firm challenge. Now let's dive into part two, which is the GBPUSD short position. Now we're here on GBPUSD on the daily time frame, and we're going to do the exact same thing using the exact same four confluences: market structure, premium versus discount, liquidity, and supply and demand. So what we're going to do here is you can very clearly see the overall market structure, because the first thing that you can always pretty much do, which is the easiest thing to do, is identify what is the market structure doing. So what GBPUSD had was an overall beautiful uptrend here in towards the highs, where we had a higher high, higher high, a higher high, and a higher low, until what happened, we broke that higher low, and the overall trend shifted from what was once bullish into now bearish. So with that overall market structure shift, I understood, okay, I'm now looking for a potential short position. Now, what we can then do is draw in the overall break of structure line here in towards the downside. And then the second thing that I want to do is draw in the premium versus discount tool. So what I identified here is, okay, we're trading above the premium. So the market has retraced in premium pricing, and we can now expect that this is then, for example, the new lower high, and that a new lower low can be put in. So I want to trade the overall 4-hour trend further in towards the downside. Now, going into further liquidity, we can see, now looking at the third piece of confluence, which is liquidity, we had two main liquidity highs: this little bump in the road over here and this high over here. Now, this first high is swing high liquidity that caused already an initial 240 pip dump in towards the downside, and the other overall high that we had over here was more trendline liquidity, where you had a nice overall descending trend line in towards the downside, which eventually, again, the market comes into into that very first high, liquidates that, and then gives us a V-shaped reversal in towards the downside, breaking again the overall fractal structure. So what we had here was a little internal uptrend here, break up, here a break up, and then here we had a break in towards the downside, causing the overall buy up for the strong sell down to then be the overall supply zone. So this here was the first supply zone, and now we formed a second area of supply, which again was an overall buy before the sell over here. So what we now have here on the chart is, 1, we have liquidity; 2, we have market structure, which is bearish; 3, we have premium pricing, which we've reached, and we're now looking to trade the overall continuation further in towards the downside; and 4, we have supply zones, which are currently in control. So the overall supply flow is in control, and we're looking now to trade the overall impulsive phase further in towards the downside to establish a new lower low. Now, when it comes to that, it's very clear on the daily, hey, we're looking for that short position. Now, looking at the 4-hour time frame, can we identify the same? Well, yes, because what we had here on the 4-hour time frame was first an uptrend. So here, break of structure up, break of structure up, but then what we had was a break of structure in towards the downside, and here again another break of structure in towards the downside. So for me, again, on GBPUSD, it was very clear that we had a high, we had a low, we had a lower high, we had a lower low, and I was looking to establish a new lower high to then form again an impulse in towards downside and a new lower low. Now, we do the exact same thing as on EURUSD. We look for the 4 individual confluences. Well, first of all, we have market structure that is bearish. Yes. Then second of all, we wait for price to retrace into premium. Then third of all, where's liquidity? Well, we have here a little bump in the road, which is liquidity, a little swing high liquidity. And then number 4 is obviously waiting for supply to be formed. So what happened here is that GBPUSD started retracing further in towards the upside, and what we saw is that price retraced into this beautiful area of supply. So what we have is 4-hour supply within daily supply. We have here the overall internal liquidity high. And now all I was waiting for was the 4-hour change of character. So the 4-hour market structure shift to confirm that supply was then formed, and from where I was happy to then further short this in towards the downside. So what happened is that we rejected this initial area of supply, and yes, we could have already shorted that, but personally I was waiting for a little bit more confirmation. So what happened here is that, okay, we got the overall shift in market structure. Again, we form a beautiful supply zone here. That is then where I was happy to take my short position, stop loss above the highs, targeting a new lower low. And from there, the market then started dumping back down in towards the downside, eventually creating a new lower low and hitting RTP. So these are the 2 exact trades that I took in order to pass that one phase $100,000 prop from challenge with the trading pit. Hope you guys enjoyed this video. Make sure to leave a like and subscribe to the channel. And without further ado, I'll see you in the next video. Thanks, guys.